So, do you remember last Thursday when I mentioned TDD?
Yes.
Yeah. I didn't
Wow.
end up taking that. Wish I did. I wish I did. I didn't end up taking it, but it did end up running. Can't lie. It did end up
Oh,
running.
I know. I felt it. My TTD equity is one of my biggest holdings. I'm very thankful for TTD. They've pretty much erased that entire earnings sell-off in a matter of, 2 weeks, 2, 3 weeks. But looking at this ARM setup, this was super clean. Did you enter it on either, what
I
was that,
entered it
Tuesday or
literally
Wednesday?
it's like right around 64.
Beautiful. That's
Okay.
perfect.
And I took it she took it at yesterday right around the same area because the contracts had kind of dropped in price because the day had passed.
Yeah.
I'd taken another ad because I still like the setup.
Awesome.
I liked the way the market was moving, and we got that bounce today.
Yeah, that follow through was beautiful. And this is like I've said this before, like if you see like a continuation setup like this is exactly what would be in a textbook. This was perfect, you know. You had a reversal over, a very clean reversal out of this range, right? That we finally broke over 56. And when we established a relative high, we began balancing, right? So this, 2 week period here, super clean value building, right? This was them basically saying we're accepting these prices, right? We like this valuation still. And so we had established value at the relative highs, and we in the levels were super clean, right? 61 and 64. Those are your levels to play off of. Sure enough, we got the continuation move and perfect retest, right? Yeah, of course, you had to sit through maybe a dollar dip under the level, but you got the daily closes back above. Every time they dipped it under, they saved it. And so you had some very high confidence that we were going to get this continuation moving.
That's partially why I still liked what it looked like. It was still
Yeah, dude, this was perfect. I think you caught a very, very, very clean play. And honestly, I wish I had kind of looked back at it because I remember we liked it this day. We I don't know if we caught this move, but we had our eyes on this arm setup for this whole period, and it finally gave the move, and I didn't even bother to look back at it for this retest. If I'd seen this, it would have been very clean. So good on you, man. Very nice catch.
the other one. I was I just I actually had one contract, and I was like, "We'll see what happens." Took it on that.
Okay.
Still
Oh
like
wow.
in the morning. This one, this one was kind of a lotto play. It actually ended up still doing really well.
Oh, it killed
Um,
it.
was just I think this was more pure luck, to be honest. I just saw momentum, and I was like, I'll pick up a contract, see what happens. Hit up yesterday, like midday, um, and that ran.
No, this thing's nice, man. This was a really nice setup as well. It was a little bit harder. It was a little bit rougher around the edges for sure. Picking an entry would be a little bit difficult, but
Yeah,
once you got that follow through here, you're right. This one was solid. Pretty much the exact same setup, if we're being honest. You get a nice clean reversal move. They build value at those relative highs, and then sure enough, after enough what's it called? Enough support being proven, they were able to see a continuation move. It's pretty much the exact setup we just saw on ARM. And that's one thing I kind of want to point out right now. I'm sure you guys are noticing a lot of names that are not really either profitable or, market leading names. They're doing really well right now just for the simple fact of, anticipation for the future is high, right? People are under the assumption that inflation is, pretty much under control, and there's the excitement of rates possibly being cut early next year. So there's a lot of positive sentiment, and that of course works wonders for growth names who, if rates are going to be cut from a macro perspective, that's very much growth incentive, right? That's a major growth incentive is, you're much more likely to take on more or greater operations. It's easier to expand when rates are lower, right? But doing business is cheaper when rates are lower. So the anticipation of rates being cut, which, we just got yesterday with Powell saying, hey, we're pausing again, rates are going to be left unchanged. And he also hinted at 3 possible rate cuts in 2024. That's why these growth names are doing so well. You know, you look around, Roku, Carvana, ARM, Coinbase, all those names that are kind of, uh, haven't done so well the last couple of years. When you start cutting rates, this is the best time to focus on those growth names. So, yeah, it's no surprise that names like this are doing really well right now. Banks too. Have you seen banks as well? Pretty much all banks have done numbers the last couple days, right? Bank of America, Goldman Sachs. Yeah,
It's nice. Fargo is nuts.
all of them, all banks. Anything in the finance sector is killing it right now just because of that. What we just talked about, right? The anticipation of rate cuts is very much poised for financials to do well and growth names to do well. Those are the two sectors that, if we get a rate cut, those are the names you want to be focused on. But yeah, do anyone what's going on, Humby? How's your night going, man?
Yeah, sorry, bro. Doing pretty good. How you guys?
Doing good, doing good. You got anything? Any of you guys want anything to check out, or just general questions?
Um, it's tradition on zero. So I mean, why not? I'd like to hear it.
Wow, Zoom. I have not looked at this name in a long time. Okay, so Zoom is pretty interesting. I'm gonna trim my chart down a little bit just to get a more accurate look at this. So yeah, point of control right here at about 69. That makes sense. Just looking very broadly here, it seems very clear that this 74 level is your level to beat, right? Risking shorts at this level has worked numerous times, and it honestly looks like it's working again now. It's seen its fair share of positive action since, the market bottomed back about a month and a half ago. But, you know, uh, we are kind of at a point where myself, Mo, and Hoosier, we're all kind of thinking that, market's ready for some pullback, and we should be shifting our risk to reward for downside again. So while volatility is low, the market can certainly inch higher, but the main move upwards is likely concluded. We may see about 1% higher or more on the market, but you shouldn't be entering long-term longs at this point. If anything, you should probably be reducing positions to cash or even positioning for some shorts, looking about a month to 3 months out. Um, Seeing that Zoom has still not been able to crack through this area, I think that's probably where you want to position as well. If you see another pop into 74 or a pop over 74, I think that's probably a great risk to reward short. With time, of course, I'd say probably a month out to 2 months out, maybe with some 70 puts. What are those contracts looking like right now? So maybe monthlies. Yeah, these are cheap. These are super cheap. Um, and still, I would honestly say you could probably even get a better entry if we see another pop up into like 73 to 74 tomorrow. You could definitely get a really solid entry on some swing shorts. Um, but I don't think we need to overcomplicate it here. I think we're kind of gearing up for a little bit of downside on the market. Nothing major, but definitely some profit taking and some support testing. I think we definitely got ahead of ourselves off this recent kind of CPI euphoria. Um, and this chart feels like, it's pretty much handing you a very clean risk to reward play on a silver platter, you know.
Yeah.
Downside targets, I would definitely keep an eye on this 70 level, right? This is, right around that point of control, and it's also the top of that volume taper. And if we do see a more aggressive sell off in the market, we could definitely see as low as probably 66 to 67. Um, so yeah, I'd be looking at 70 to 71, and then leave runners down to about 66 to 67, and that's about as confident as you can get. Now, I could definitely be wrong, and we could see a major sell-off in which we head all the way back down. But for now, these are your comfortable targets, right? 71, 70, and then the lower end of this volume taper from where we've established value. So the point of control is just the one price point where the most volume has been done. So that's where, yeah. So this blue stuff, yeah, you've been here before when I've gone over volume profile, right? So yeah, the point of control is just the one spot where the most volume has been done.
Gotcha.
And typically you can see reactions off of it. On a chart like Zoom, it's not going to be super respected. I'll be honest with you. The point of control I always feel is better for intraday trading and using it for session specific action. On a larger time frame, you're going to focus more on the taper zones, right? So like pops over this 72 area, good risk reward for shorts. Pops under this 65 area where the volume really starts to get steep and falls off. This is an area where risk reward for longs is going to be good. So on larger time frames, like daily and weekly, again, you're going to want to focus more on these taper zones. For intraday trading, the point of control could probably get some respect. Just looking at ES, I want to see today's intraday volume. Let me change it so that it shows intraday. Okay, so here we go. Look at that. Very clean. So the market didn't even open until, right about here, right? Got some buys. At this point, this volume wasn't established yet, so you wouldn't really be using this area to make trades because it just wasn't there yet. Um, but yeah, where was the first spot we rejected after hours? Right? Very clean, right off that point of control. You know.
Interesting. Awesome.
Um, but check this out, right? This is kind of this is going off that point. So this shelf right here, right? Let me highlight this real quick. This shelf right here. Oh, my tool is not working. This shelf, this big one, wasn't established until we did all this action in the end of day, right? There's no way this giant shelf was made just from this action right here, right? So this wasn't here yet. The only thing you really had to go off of was this big shelf, right? This one. And so look what happens when you dipped under it. That was the best spot for longs, right?
Follow you. And actually, remind it so I can do stuff on your shit down.
Yeah.
Like, indicator or
This,
if we're just showing it.
this guy. Yeah. So this is volume profile. Um, and for the newer guys, I know Random Brandon and forgive me if I'm pronouncing your name wrong. Is it Maria Dig? Well, yeah, this area, all it does is it reorganizes volume by price instead of by time, and it is very, very useful for intraday trading. You guys have known I use this extensively, and most of the entries I take, for example, this one this morning, right? You could have looked at it from a technical perspective and gone, okay, we rejected this 80 level a handful of times in the pre-market, and we bounced it a few times before. Now that we've fallen under, it's a good spot to risk shorts. You could argue it from a technical perspective, but the reason I took these shorts this morning was because we had that in addition to the fact that that was the top of our volume shelf, right? And so this is where we took our shorts the second time during the day and we got some nice trims off. Again, it wasn't a super clean move, but this is where we played our shorts intraday. And it was right off the top of the volume taper, right? But this is why I use ES, right? This is why when I'm trading SPX contracts or SPY contracts, no matter what, I'm looking at the ES chart because I've got all the overnight action to help me figure out where these kind of fair value zones are, right? On SPY where it gaps and on ES where it gap or on SPX where it just gaps to wherever ES goes, you don't have any of that overnight action built. So if we look at SPY, for example, right, like SPY is a little bit better because it does kind of show overnight action, but it's very gappy and that's not high volume action. And SPX is even worse. SPX doesn't even show you overnight action, right? And first of all, it's not going to show you volume at all. So ES is primarily what I'll watch just for that reason alone is you get the overnight action to help give you that kind of information. Does that make sense? Um, But Zoom, yeah, just like I said, bigger picture, you really just want to risk against 74, 75 for shorts. This is one that still has not found any strength despite the overwhelming market positivity, and is at a very clean spot risk to reward wise. Hell yeah, man. All right. What's going on, Bread Man? What's going on, Saba? Nothing much, nothing much. Yeah, what's up? Yeah, yeah, yeah. So this is a huge, bigger picture setup. Let me cut down my chart a little bit to the last 2 years just to get a more accurate volume reading. Okay, so I'm just gonna extend this guy out a bit. So 100, right? Very, very big psych level. Back in 2022, early 2022, right after we fell under 100, this was the primary area that they struggled to get over. Right, you can see about five very clean rejections here before a continuation lower after some poor earnings. Um, and after the most recent earnings last quarter, it was the first spot that we ran into sellers and pretty much again, right? So this 100 level is really important, right? It's a major psych level and it's seen technical respect in the past. Most recently, we have reclaimed that spot, right? In the first spot where buyers showed up, one dip under 100 and it was saved, right? So buyers are showing acceptance of these prices and they're willing to trade this. So your best spot for longs was risking against this 100 area with just a daily stop under, either 97.5, or if you really wanted to play it tight, 100, right? Any daily closing under 100, you'd be stopped out. But this was the best spot to risk longs at this point. Um, but looking at the most, intermediate structure here, you've pretty much just got a very slow fade, right? They're still accepting price up here, and they gave a shot at a continuation today, and it failed. So it kind of throws a stick in the spokes. But bigger picture, so long as you can continue to sustain 100, I don't see why we can't continue higher here. 100 is your line in the sand, and this is where you're going to want to see price action continue to be supported. Um, what was I gonna say? This morning, like I said, we saw it. It jumped into that pivot high and it failed, and it sold off really quick. So it makes me believe that you're either going to see another test of 100 here and a potential sell off, or it's just going to remain in a balance for a lot longer. So I don't think there's much of a short term opportunity here. It's definitely, today you could have taken a shot at it, right? Let me turn off volume real quick. There was a minor setup here. Looking at just these last, this level right here, it's about 103.5. Let me go intraday and mark it off. Yeah, there was a opportunity here. The level I'm looking at is about 103.5-ish, this guy right about here. So this is an area where after we failed, we saw one, two, three rejections off of. And then the dip under 100 was saved, so you had a feeling they were going to come back and test this. Once we saw that this level was broken, you would have a fair bit of confidence that we would look to run the test of highs. And on the daily, it looks a lot cleaner actually, right? So check that out, right? This is an area where, pivot, pivot and pivot. But this guy, once you cleared that most recent pivot, just going off of price action alone, um, you know, once this was cleared, I mean, there's a lot of things you could argue from a technical perspective here. You could do something like this, right? You could always do something like that, right? Once we cracked over this and this guy, the short squeeze was more than likely. And I know a lot of you guys may have a weird connotation of the term short squeeze. Um, but in reality, short squeezes happen all the time. They don't happen to be as big as GameStop or AMC, but typically when, you know, something gets moving to the upside and it's spent, a week or so trending lower and there's lots of people positioned shorts and they realize they're wrong, they simply have to liquidate those positions. And when you get a mass liquidation of shorts, it has the same effect as buying a fuck ton of equity, right? So this is exactly what I mean, right? This was probably a level that a lot of shorts had their eyes on and were focused on. And once we were over this in the morning, they looked at that and thought, okay, I'm wrong. I need to close out for the smallest loss possible. So that's why you can look at this in this morning. As soon as we were over that point, we got a big push higher, right? Despite the market opened pretty choppy this morning. And from where futures opened, we didn't make much progress higher throughout the entire session. But once Roku opened over this spot, a lot of shorts had to cover their position, right? And that's why we ended up getting a quick push higher in a test of the pivot high, right? So there's a lot of things that you could draw on this chart, but the macro is what's really important, right? Is we've reclaimed the 100 level, which has acted, as we just went over, as a major point of contention over the last 2 years, pretty much. And we've seen buyers continue to support it now that we've reclaimed it. So we've seen price acceptance, and now you had a little bit of a short-term technical setup that followed through based on shorts having to liquidate. Granted, they ended up showing up later in the day and corrected it, but today was the day to play it. If you didn't catch it today, it needs time. You get what I'm saying, Breadman?
January 5 contracts.
Great.
I didn't jump in yet. That means that's just back to
Yeah. I would just set alerts at 100, and if you get a dip under 100, that's a good spot to try it. And then I would just use daily closes to kind of monitor that position. But otherwise, again, I think you're kind of going to get stuck in a little bit of chop here. If you're fine taking $2 or $3 of profit, great. I don't think we're going to see this 108 to 110 level again for a couple weeks at least. So if you are looking to play it, I'd probably have expectations limited. If you catch a dip under 100, I'd probably only be aiming for like 103 to 105.
Gotcha. Okay.
Yeah. Hell yeah. Oh. What's going on, Saba? You got anything you want to look at, man? Hey, what's going on? Is your name I'm trying to get your name right. Is it Mary?
Yeah, Maria Dig. You're correct. Yeah.
Okay, cool. What's going on, man?
Maria Dig. Yeah. So I'm not too familiar with technical analysis yet. But it's on the way.
Sure.
Meantime, what do you think about the real estate market with the interest rates in the long term? Do you think it's a good stock to keep
Oh,
next year? Do you think everything might take a turn?
yeah, you just opened up Pandora's box. There's so much we can get into. The main thing right now that's keeping prices elevated, despite rates being high, is a lot of these major funds and banks buying up real estate, right? Demand is still high due to their actions and their actions alone, right? Your average neighbor and friend is not, looking to buy a house right now due to rates, right? But you know who is? Major banks buying up all the properties because they know that regardless if rate cuts do come next year, you know what's going to happen? Demand among the average person is going to skyrocket. As soon as rates drop just 1%, half a percent, everyone and their mom is going to start looking to buy a house again, and prices are going to more than likely remain elevated, right? So we've kind of got ourselves in a pretty tricky situation because you know, from a broad perspective, there's really no reason for a major correction because banks have done everything in their power to kind of buy up single family condos, all of those type of, properties. It's unfortunate, but had banks not gotten, as deep as they are in buying up properties, we likely already would have seen a major correction because like I said, with rates super high, the average person, the demand is extremely low, right? People would have been in more of a crunch to sell their houses. The only properties that are really seeing corrections are extreme luxury properties, right? So like houses over a couple $1,000,000, anywhere from like 4 million to the super crazy houses. Those are the only properties right now that are seeing a real correction in price, and are you're seeing the listings getting cut by 25 to 50% across the board. The average house, though, which is 95% of all real estate, is still being bought up by banks, by funds, by money managers, all that. So demand has not taken a hit. You know, if I go to sell my house right now, I'm probably not going to end up selling it to a family. I'm probably going to end up selling it to a bank using an LLC as a cover up. So, it's difficult because we haven't seen a demand drop off. And when rates fall and we do see a cut, demand is going to pick up even more. And so it sucks for you and me who, hope to buy a house in the next 5 to 10 years, but yeah, real estate names should remain strong. And a couple of the ones off the top of my head, SPG has done wonders, right? SPG's been doing really well. Um, what are some other good ones? Vinci's been doing pretty killer the last couple months. A lot of these names have really just been stagnant over the last couple years, but I would imagine, when we do eventually get the rate cuts and demand just spikes even higher than it is, a lot of these real estate names will probably continue to stay strong and may even look for, extended prices. What were you thinking? Were you looking to maybe take some long-term positioning, or are you in the market for a house? What's up?
Yeah, no, I was just looking for long-term real estate stocks, just for like a safe part of my portfolio. And I bought Vici today, actually.
Yeah, Vici's a great one.
That was gonna be good.
Yeah. I am just nervous just about where you're entering. It definitely feels a little bit riskier. I feel like, you know, we could have, I'm not giving you shit. I know you're newer, but do you have more capital to expend if, over the next couple months the market takes a hit? If this thing dumps back into 29 or so, are you willing to buy more, or did you kind of expend what you were willing to pay for it?
I kind of expended what I was willing to pay for it, to be honest. And I could do more though, but
Okay.
yeah, I wasn't planning on putting any of my portfolio in it.
Okay, I would definitely probably cut your position in half and be willing to buy more in a couple months.
Okay, makes sense.
Yeah, because just where you bought from a risk reward standpoint feels very risky. I could be wrong and we see the first rate cut as early as January. I don't think that's going to happen, but I've been wrong a million times and I'll be wrong a million more times.
I think the first rate decision, that really like a true decision, is
Exactly. So
Okay.
I feel like before March, you can definitely get a better price for this.
what's your average price on V.
This morning, so I think it was yeah, I just bought it today.
16, 30,000, 30,000. Wanted to get in. My actual goal was to get in was around, I think it was 29.30 was the one like a Fibonacci retracement a few months ago, and it just never got down there where I wanted. Well, I didn't catch it, so I went with another one. I'm in O.
Yeah, O Realty is great too.
And my average, I got 290 shares of O. It's trading 1,200, so I'm paying $100 a month. And my average cost on O was like $52.
Yeah, just from a larger perspective, I know you've got, if this is a position that if you're building a long-term portfolio, if you don't mind me asking, how old are you, man? 19. You've got your whole life ahead of you, right? So you do not need to worry about a dip. If it does dip, it's not the end of the world. But I will say, if you're building a long-term portfolio and you plan to hold this stock for 5, 10, a long time, 5, 10 years or more, don't worry about what I said. You're gonna be fine. But if you are just looking to take advantage, what's up, Redman? Yeah.
Now, but it's one cap. And now you can put 100%. That's going to be limited because I think it's now for a season. If you bought in today, you'll be getting 5% of your money until it goes back to wherever it's going. If it's going to be
What I was trying to say is if you're holding if you're getting a position that you're gonna hold for 5, 10 years plus, don't even worry about what I'm saying. It's gonna be you're gonna be fine. But if you're looking to capitalize on, you know, the demand that's gonna be caused from rates decreasing, then you're more than likely gonna want to have a better price. Does that make sense?
For sure. I get it. Yeah.
Um, but
you have 100. But it doesn't pay.
um,
That's right. What's the strategy?
oh, dude, he's I don't want to assume, but he's 19. I don't think he has the capital to sell covered calls.
This one.
Yeah.
I just bought $1,000 worth of VG.
Oh, dude, like I said, cut that position in half, and then just wait a couple months and pick some more up at a better price. That's what I would.
Yeah.
That's what I would suggest.
Yeah. Is that just like selling contracts? Seeking options?
Yeah.
Like that. You got about 31 shares.
Yeah, somewhere around there.
You need 100 shares to sell a covered call. They only have monthly contract. They don't have weekly. Like if you were to do it January 19th, and you were to sell a 32.5 call, you only get $33. But the delta on that is 38. That's too high. If you go to the next strike price at 35, you're only getting $8, and the delta's at a 9. It's not enough money to even do a covered call walk.
But I think he's just looking to start a long-term portfolio, Breadman.
Well, he's on the right track. I wish somebody told me at 19 to do this, so I'd be a millionaire by the time.
Right. Well, hell yeah, man. I'm glad you're taking advantage early. Breadman's speaking the truth there. If I started building my long-term portfolio, right around the same age, and it 4 years later, it's already looking great. So I think I got into equities at 15 and I got into options at 18. You're starting so early, dude. It's great, honestly. It doesn't even matter if you take some losses, go through some trial and error. The fact that you're already getting into the market at this age is setting you leaps and bounds ahead of the generation before you. So kudos, man.
Yeah, thank you.
So also like there's gonna be a time so it's January. They're gonna be selling off some of those sugars or tax harvesting. Prices will come down when that happens. Obviously, the market can't keep going up forever. We're gonna have pullbacks. Don't let that number scare you. You bought it at $31. Now you see it at $30. You're like, oh, I'm down 30, $40.
Well, Vici's also a relatively slow moving name. Even if it drops all the way from 32 back down to 30, you're only what down, what is that, 6% or so?
Yes. If you're looking at from 31, even if it got down to 28, you had $2 a share, only be down $60. It's not a life ending thing for you. Just reinvest the dividends, and when it gets lower than 8,000, buy 1 or 2 more shares, just cost yourself down, and that time to decide. Let's get it out of it just because
Yeah.
it's
But-
much.
Hell yeah. Brandon, Random Brandon, how's your night going, man?
It's pretty good. To bounce off what Brethren had said about the dividends, that did raise a question for me.
Sure.
So I think Bretman said that it raises it 5% for the dividends, right? That's what he had said. It's at 5% now at $31. If the price dropped down to 29, my question is, oh, go ahead. No, I'm sorry. Go ahead. No, finish your question. My question is that I was reading online because I was interested in some of the dividends because I had found a stock named Berry for like $6.90 per stock, and it said that the dividend yield was 14.70%.
What's the ticker?
Right, it says that. Pardon?
Sorry, what's the ticker? I'm gonna look at it.
BRY Berry. It's an oil and energy stock, and their dividend yield is 14.70%, and they're like $6.90 per stock. When I checked earlier today, my question is that when I was reading online, it said that the information was kind of like diluted, I guess, because some of it said that they pay out quarterly, and some of them said they pay out annually per year. So I don't know if it ranges like for each different stock and company, or if it's the same for every single one. Yeah, I can tell you right now.
Yeah, they pay out quarterly, and their yield at the moment
21 cents a share right now. Last quarter it paid 13. The quarter before that it paid 12. The quarter before that it paid 50 cents.
Yeah, the tricky thing about this one is their dividend is not set. It looks like their dividend is tied directly to their profits, which makes sense. So it's not really a dependable payout, right? You can't really guarantee what you're gonna make. This would definitely not fit under any sort of fixed income type of deal. And right now, based on their price and their last dividend, um, shoot, their yield is actually a lot lower. Their yield's at
1.39.
I've got it lower. I've got it at 11.8.
Oh, I'm looking at it on what's this? Nasdaq.com. Dividend history. Paid out on 11/14, 21 cents. Dividend yield is 12.39.
We can just do the math. So assume they paid 21 cents for the next 3 quarters for a year, right? So 21 times 4 is 84 cents divided by 6.97. Their yield is 12%. So yeah, so basically you can see, right, based on their last dividend payouts, it's directly tied to their profits. So it's not really dependable. Also, energy is a very, very tricky long-term hold. I personally believe oil is poised very well for the next 5 to 10 years, just based on macro conditions. But who's to say 20 years from now, we haven't done something to where oil is a fraction of the current price, right? Assuming we stay on, our current trajectory, oil should continue to increase in price indefinitely, but I imagine at some point as we run out of oil that we're going to have to make a switch eventually. So it definitely varies based on macro conditions, but if you are looking at dividend names, if you're looking at dividend names, I think the safer ones are just select spider ETFs. So for example, XLE is the energy ETF. This is probably a lot safer. It's going to pay a smaller dividend for sure. It's going to pay a much smaller dividend than what Berry's doing. I don't know how they're sustaining a 12% dividend quarterly. That kind of raises some flags for me, honestly. Um, yeah, a 12% yield raises some flags for me. It seems unsustainable. I don't know how they're doing that. I'd need to look into them more, but XLE is just the energy ETF. It's got some of the best names you can imagine in it, right? Exxon, Chevron, EOG Resources, ConocoPhillips, right? And even some new ones, right? Diamondback Energy, Halliburton. There's some other fun ones in here, but it's about as safe as you can get, and it still pays a very consistent dividend. Doesn't really see severe pullbacks, right? Of course, it's going to move with the macro trend of oil prices, but bigger picture, it's because there are actual companies reporting consistent profits here. This is gonna remain higher valuation 10 out of 10 times against the actual commodity of oil. And we touched on this last week as well, but um, an energy ETF that holds companies is always going to outperform the commodity prices purely because there are profits being reported that add to the intrinsic value of the ETF, right? And the companies within it. So if you do want to invest in the energy sector and guarantee yourself a dividend, I'd play it safe and just play with XLE.
That's the thing.
Yeah, that's your safest bet. Does that make sense? Does that make sense, Brandon?
Yeah, I appreciate it. Thank you.
Yeah, of course, man. And to touch on Mario Dig, same thing for you. XLRE is the real estate sector. Again, this one's kind of pumped up again. This probably isn't the best spot to start a position, but if you want exposure to the entire real estate market, this is the same thing, right? This is the exact same name. You've got I'm actually not familiar with a lot of these names in here. I really just know Simon Property Group. What else do we got? American Tower Corp. Right. A lot of these names are
Digital.
yeah.
Mine's a cell phone tower. The cell phone tower. It's already at the bottom. Restaurant number 20. And that's else.
Yeah, but anyways, if you want exposure to the entire industry and the entire sector with much reduced risk and a dividend, um, this is the name to go with. XLRE for sure. And if you guys would like, sorry.
I was just gonna go fully off topic for a second, but just finish what you were gonna say first, and then I'll jump in.
I was just gonna say, if you guys want a complete list of all the Select Spider ETFs and their tickers, I can drop that here for you in a chat real quick. Let me do that for you. I would say my portfolio, I hold a handful of the Select Spider ETFs, and they're safe, they're consistent, and you get exposure to the entire sector. So let me send these in real quick. I'm gonna post these in Stock Talk for you guys right now. You can see Energy had a killer day today. It's posted in Stock Talk now. So if you see, Energy had a 3% day. That's definitely not average. Today was an incredible day for Energy. You can see consumer staples took a bit of a dip. Same with utilities. Tech sector had a pretty flat day, along with communications. But yeah, this is the Select Spider ETFs. And if you are looking to start building a long-term portfolio with greatly reduced risk plus a dividend, these are some names that you really want to focus on. All right, what were you gonna say, Captain? Oh, Humby, what's up? Sorry, man.
Sorry, just really quick, like you said dividend. So like how exactly, like is there like a minimum amount of shares you need to hold to like get that dividend?
No, no. One share will give you a dividend.
They're like companies are all different, like some are quarterly, some are yearly.
Some are monthly. Yeah. But you do have to hold it for a period of time. So, for example, let's say a company reports or a company pays out its dividend tomorrow. You can't buy the stock today and get the dividend. There's every company's different, but there's a certain period of time that you have to be holding the stock to receive the dividend. It's typically about 3 to 4 weeks ahead of time.
Gotcha. Okay.
All right, what's up, Captain? What were you gonna say?
I don't know if you saw one of my messages, like, I think this was, late last week, about a stock that released a dividend, like a special dividend for like $8.
Yes.
And the share price at the time was like $8. So that's nearly, and now, I mean, it's still trading at 12, and that's a 66% dividend yield.
Wait.
Obviously,
What's the stock?
It's MBI.
That doesn't make any sense. Huh?
It's going to pay out an $8 dividend yield on the 22nd. I was talking to someone in chat, and they were saying how big companies sometimes do this in order to move money. So, for example, like biggest shareholders are the company owners. So they give out this specific dividend in order to basically take their cash out. So what they'll do is they'll set up this dividend. So they'll bump the stock price. Then on the 18th, because so the 18th is the last day that you have before you can't receive the dividend. So if you like put your money in after the 18th, you can't receive the dividend. So I was talking to someone and he was saying that biggest shareholders on the 19th will take out their stock cash. So it's basically like they're gonna move they'll set up this dividend to get buyers in, but to get themselves out.
I'm reading about this now because it just doesn't make sense. They announced a dividend that was greater than their entire market cap.
Right.
It just I'm trying to figure it out. I'm sorry, I haven't seen this before.
No, you're probably gonna it absolutely boggled my mind as well.
Yeah, it doesn't make sense.
It doesn't. It literally doesn't.
They had to get funding to do it. What?
But my question is why this stock, and is this just like a scheme or just what's going on?
I'll be.
This is special dividend based on.
Okay, I know what this is. Okay, so they had stock previously, right? And let's look historically. Let's look way big time. Check this out. They haven't released a dividend since 2007. Okay? This for companies that pay dividends historically like this, if you have preferred stock never stops paying a dividend. For example, if they stop paying dividends, they have to repay all the missed dividends when they decide to start paying dividends again. So that's why they needed funding for this. They wanted to continue a dividend service. However, they had to repay all the missed dividends over the last 15 years. That's why this is happening. So for preferred stockholders, if you held stock all the way since then and you missed a dividend for the past 15 years, they're repaying every single missed dividend in that time. After this dividend, it'll go back to this number, more than likely, this 31 cents, if not maybe a little bit higher. Jesus, bro, I had to go back to like my finance 101 knowledge about this. Yeah, so this is a preferred stock. Sorry?
Go ahead.
This is a preferred stock what's the word I'm looking for? This is like a preferred stock like bonus essentially. It's basically all the people who were entitled to a dividend over the last 15 years are finally getting paid for it.
So right. But can other people benefit off this as well, or this is just specifically for those preferred stockholders?
No, this is only if you've held stock through that time.
It seems like that they're like marketing it as
Because
it's $8.
So this is what I saw, right? Look at their shares outstanding. Where did I see shares outstanding?
Record date is 12/18. You need to own it before 12/18, and you can get paid on 12/22. But the actual dividend was 34 cents, and you need to be in by 12/21 to receive that payment on 1/15. So I posted a stock talk. You can see it. The $8 thing.
Okay.
26 and 18.
So I've got it. They've got a total of 51 million shares outstanding, and they're only paying dividends on 14 million shares.
So this news shot the stock up. But none of these people who got in actually going to get that $8 dividend.
No.
Right. So now the question is
34-cent dividend that they're going to get.
right. Now the question is this thing going to drop on the 18th or the 19th or the 22nd. Most likely the 22nd.
Well,
Because people are gonna realize.
maybe a little bit, but it's not going to go all the way back to this price, because what you got to understand is having a dividend adds intrinsic value to the company, right? Because there's time value associated with this, and every single valuation model takes into account a dividend payment. So the simple fact that they're reintroducing their dividends, see, this is a one-time payment to recoup the 15 years of missed dividends for the preferred stockholders. Okay, so now they're re-implementing a normal dividend. The simple fact alone that the stock implements a dividend and pays a dividend at all adds value to the stock. Like I said, you can look at every valuation model there is, right? Free cash flow model, dividend discount model, the Graham Buffett model, all of those, they all take into account a dividend payment. So the simple fact that a dividend is being paid on a company adds intrinsic value. So it will probably drop a little bit just from people kind of, not getting that dividend and kind of looking to just kind of capitalize on it, selling out and closing their positions. But the simple fact that they are paying a dividend again adds value to the stock. So it's not going to drop all the way back down to this 730 area.
Okay, thank you.
Yeah.
Wax, these lightly traded, this thing trades 300K shares a day, and now it's trading over 10 million.
Yeah.
So shit like that, that's lightly traded, that is trading on a catalyst in a rush, like jackribs and shit, they tend to drop more than they should. And they tend to drop pretty hard and pretty fast on that first post-ex dividend day, or even that after hours session. Just in my experience, I follow a lot of these, some shitty clothes that try to pop off a news thing and everybody flips in.
I wouldn't be surprised. I just would be very surprised if it fell all the way back to that 7 level, just for the simple fact that they're paying a dividend again, right? All the long-term people who were looking at this company thinking, oh, I like their fundamentals, I like their growth, but they don't pay a dividend, so I'm not really willing to lose the capital gains until they start paying a dividend again. All those people who were waiting for this to buy in, those people are going to continue holding.
Yeah, but those puts, is still in the low teens, months out are pretty cheap,
For sure.
with that ex dividend date coming up. That's not a bad idea. I had no idea about this ticker.
Yeah, I don't really trade these low floats too much, and typically with options, stocks with this small of a price tend to shy me away, but I'll keep an eye on it. I'll check back in on it in a couple weeks for sure. Oh, we've covered some good stuff today, guys. I think when we post this video, it'll probably be called dividends. We are coming up on the end of the session here. Anyone have anything they want to cover?
Missed the whole thing. I didn't even realize you were live. I was doing something else. Take a look at ALGN.
Sure. Just to let everyone know, if you guys didn't, if you guys had to step away for a minute, or you want to review the information we covered, all of these videos and all of the previous videos, all of our sessions are recorded and they are posted on our YouTube channel. So if you guys, some of you newer members, Maria Dig and Brandon, if you guys want to go review some other, sessions that we've hosted, they are on our YouTube channel and you can watch them start to finish as many times as you like. So just letting that be known. All right, ALGN. This thing reported an awful earnings most recently, and I think I heard something about bankruptcy. Was that right?
Anything about bankruptcy? It's according to that. This one. I'm just looking at this. I've been eyeing them just like SMCI for a long time as one of those just crazily overvalued things. And SMCI, it did that big pullback, and ALGN did one too. But today it completely filled that post ER gap, and those earnings were bad, right? And so there's also as much as trend lines matter from that 52-week high there through that second top before the drop, we're coming right into that as well. So it feels like, doesn't mean it can't continue to overextend, except especially in this market, but it feels like the value to fill that gap back in is kind of gone, and it's overvalued again, given that nothing has changed as far as I can tell since those earnings that dropped it all the way down.
Yeah, if you're looking to short it, I like anywhere from 75 down to about 65 for starting a position. Or is that what you're looking to do?
Was looking at short right now, man. I'm just, this is such a fucking bad shit market, and I'm not doing much. And what I am doing is infuriating. Um, it's just weird, right? Like with the way that it's extremely aggressive on extremely low volume, and the second that the sellers are done in an intraday period, it's going poof. You know, there's no balance, there's no back and forth. It's just nonstop bot programs that are running things up, you know, point at a time for hours intraday. And like the Fed session yesterday, that was just mind boggling. Right? Yeah, he came out like super fucking dovish and pivoted, which is its whole other bag of worms, but can of worms. But I have never, ever, ever seen in the years that I've been, you know, tracking the 1 minute chart on SPY coming into and out of FOMC. Usually there's that big, you know, initial move, and then there's a counterbalancing bottom wick, and then, you know, it picks the direction. There was zero, like absolutely zero after the release and into the press conference until you got that one turn down before the end of the day. There was zero wicking or pressing the direction or creating an entry or any kind of balance. It was just nonstop, the same fucking grind shit. And this is a different market. It's like people weren't even in it. It's just some AI programs that are told, you know, hey, get to this target with the least amount of money. And they just do what we got to do and hit the ask and the bid exactly where they need to. It's just fucking batty, man. It doesn't feel organic. It doesn't feel real. I'm sorry, Yvette.
Hey.
I'm so sick of this fucking shit.
Well,
Nothing's tied to reality anymore.
I'm sure you've noticed I haven't been as mad recently. And that's because I've given up. I said fuck it. I'm just gonna do what the chart tells me to do. I'm just gonna focus on technicals and technicals alone. Focusing on fundamentals in this market, I'm sure as you know, the market can be irrational far longer than you can be liquid. Or what's the saying? You know what I'm trying to say, right? Solvent.
Yeah, the market can be irrational longer than you can stay solvent. It's not even about brain. It's just about reality. Like I can't turn my brain off. I can't turn my conscience off. Like this is every facet of society feels like, you know, the things that we always knew were true, you know, that it's fucking manipulated, that, you know, the powerful have one set of rules, the non-powerful have another set, that, you know, big money and dark pool and fucking insider shit runs the market, all that stuff. We knew it was true, but they've just completely dropped the mask in all facets and just said, yeah, we know it and we don't give a fuck because there's nothing you can do. So shut the fuck up and freak out about this TikTok video. But it's like at some point, someone has to have a fucking conscience and say enough is enough because the world is going to break over this shit.
Well, hey, you know,
the entire
you know what the best irrational movement in history is? The sell-off that comes after we cut rates. And that's the best inverse that there is, because we're all looking forward to it.
You know, on Friday,
everyone's thinking,
towards the end of the day,
everyone's thinking, oh my God, we're already so high. How high can we go after rates are cut? That's where everyone's thinking. When in reality, it's more than likely going to be the one time we see a real correction.
I think the average is 6 months after the first rate cut is market bottoms. But Friday afternoon, like not before the end of the session, I pulled up the weekly chart, SPY, just to kind of take a look at structure and how we could change things. There's a fucking phantom wick to 474. Like, how do you get phantom wick? And it's gone now. I just happened to pull it up that time and I posted a screenshot in chat. Like, shit like that. Like, that's not fucking legit on a weekly fucking candle.
Yeah.
You know, when you see them on the 1 minute charts, you know, pre-market and after hours on the TD that Lego's always posting, but I've never seen that. Like it made me think of that FOMC or the CPI or something. Remember that leaked? Shit spiked like, 90, 70 seconds before the actual release. Shit went crazy.
Yeah.
And everyone said, oh, no, 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 we didn't leak, we didn't leak. Or in January, when there were all those freak out fucking orders, that someone did something wrong in the CBOE and all those fucking hidden orders that had been waiting, forever got filled. And you had these giant wicks and candles right off the bell, on all these stocks, big, big fucking names. Like shit like that is going on every fucking day. And it just gets worse and worse. We just keep pushing the line and shit breaks. Like it's hubris, it's impunity. Like eventually shit breaks. We can talk about it as traders, but we're talking about like life and grandkids and your entire fucking society. Like shit fucking breaks. And when shit breaks, it can't get glued back together.
Well, you know, I man, the last year and a half has made me extremely jaded, and I'll be honest, I got tired of of living like that and thinking like that. You know, trust me, there will be a time, more than likely in the next month or two, that I reposition in my long-term shorts. But until then, I'm just trying to take it day by day and trying to nail my SPX trades. I don't listen to a word the Fed says. We all know they're full of shit, but eventually the market will react.
We've just destroyed every fucking institution in society. The Fed has zero credibility now. In 2 weeks, Powell went from, it's too soon to speculate on if we're restrictive enough and then when, blah, blah, blah. And yesterday he's talking about rate cuts. Like, what changed in 2 fucking weeks? Aside from maybe a phone call saying,
Inflation came down 0.1%, man.
he was saying that stuff with worse data.
Yeah.
Less disinflationary data, or better data, more disinflationary data, he was saying it's too soon to tell if we're restrictive enough. And then with worse data, he's saying, oh yeah, we're talking about rates because someone's fucking saying, nice job, but no one fucks with it. I was reading a story about Lyndon B. Johnson, who threw the fucking Fed president up against a wall when he hiked during Vietnam.
Jeez.
It's fucking crazy right now, man.
Well, shit. That is too long of a discussion for what we've got, man. For the time we've got. Trust me, I could go on all day. No, I could go on all day about this.
Yeah, man. We should.
But anyways, like I said, we covered a lot of good information tonight, guys. If you guys want to review it later or watch it back on your own time, or even view some of the older sessions for before you guys were here, in our socials page is linked our YouTube, and on that page you can find all of our previous charting sessions, and there's a lot of good information over there. I would definitely suggest picking out a topic that you want to learn more about. They're all titled based on what we covered that night. Tonight's session will probably be called Dividends. We talked a lot about dividends, and feel free to revert back to me if you have any questions from that content. But on that note, you guys, I'm gonna wrap up the session here. I've got some NBA parlays that I really need to attend to, and I hope you guys have a great rest of your night. And let's wrap this week up on a high note, okay? All right. Hope you guys have a hell yeah. Hope you guys have a great night. All right, man. I'll see you later, bro.
Later, bro.
Have a good night, man.